Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, everyone. I'm Epstein, and here we are on the 11th of August, 2011. It's funny saying the 11/11s backwards. And the time right now getting on to 2:40. I'll be leaving here shortly, going downstairs to the floor of the Chicago Mercantile Exchange Group, recording for Bloomberg in a few minutes. And I'll be back up after that, and I have an interview with Barry Rosen of FortuneCast, so you're going to want to see that as well. Another 400-point day as we're coming in on the close. I've never seen this. And anyone that tells you they've seen this, get serious. I've done this 40-some-odd years. I've never seen moves this violent. And the one thing I've told my clients is stay away from markets like this because I think they're just too dangerous. Where they'll go from here? Well, I talked about that already in my, if you will, my financial update. But what about the gold market? Well, the gold market is down about $30 on the day, and it's at the 12:30 Chicago time zone, it was trading right in this area. So it's going to close like that. Why? Well, the Chicago Mercantile Exchange Group raised margins for the first time in gold in quite a while. And if you studied what they did in silver, as we had a vertical run there, and we certainly had a vertical run in silver, in gold rather, a series of margin calls makes you put up more good faith money. That doesn't mean prices will break. The idea is to take, if you will, the volatility, I think, out of the market. I don't know that margins by themselves make markets go up or down. They certainly take volatility out as they put more burden on the speculator to put up more good faith money. So they did a 20% increase last night. I look for another series of them. I wrote about that in my gold report, and it's right here. And I was here last night writing till 7 at night. And I finished the report, and I got an email at, literally, as I was going to hit the send button, Chicago Mercantile Exchange, margin increase. Looked at it, put it into the reports. In fact, it's the headline. I put it in bright red. And my guess was at that point, we still had traders in the office. I said, guys, you're probably looking at the area that the market's going to stall at. So I don't know if it's the top. It depends how many increases they do. I talk about that in here, so it gives you an idea. And we saw this in silver, so it's not like I have a magic secret about it, but taking the volatility down. On the other positive thing for gold, what's a $31 break today? Certainly not very much. So let's go and look at the gold and get an idea of what's happening. This is what the chart looks like, and this is the chart blown up. Now, you will call this a key reversal. This is the highest high we've ever had. You also took out yesterday's highs and lows, and you're going to close lower on the day, which means in order to negate this, you've got to take out today's highs of 1760. Otherwise, traders are going to say, for the short term at least, a top is in place. That's what I would expect as a technician, and I will make that statement. That's what I think for the near term. The market certainly has a pattern of higher highs and higher lows. The market, I think, will have support wherever this 18-day average ends up. Right now it's in the 1654 level, which is well over 1644. So a downside target, if you can get it, will probably be in that general zone. Now, it doesn't mean it has to go there. It doesn't mean it'll hold it. It's a target that I have being a market technician. By the way, would I tell a customer to go short to get down there? I make you this promise. No. I am not a bottom picker as a technician. I am not a top picker as a technician. It's trend following. But the odds of staying over a Bollinger Band more than 3 to 5 days, we just saw it in stock indices, so I know now it can happen in big major markets, but it gets slimmer. Each day that it does it consecutively, you have a 2.5% chance, no matter how you cut it, of staying over that number. That 2.5% gets cut down each day it's over that. So the odds start favoring you're going to pull back. That's all it means. You're going to pull back into the band. It doesn't say it's going to be a top in the market or anything else. You go to other indicators. One of the reliable ones that I look at is how does the chart pattern look? And it looks heavy right here. I see the support coming in, as I said here, at the 18-day average, and now I'm watching momentum. And the stochastic is again turned down. It's under 80. You can see the reading here at 78 if it closes just the way it is. And I already know that because we already know where the close is from that point during the day. So I'm going to again target the 18-day average. I want to give you a caveat. A week ago, I did the same thing. Market lost its momentum. Market was right there under the Bollinger Band, and I thought you'd make a run for the 18-day average. That Friday afternoon, same afternoon, that's when Standard & Poor's came out, and then Sunday night you had the European situation. So now you're getting a replay. We'll see if it works this time or not, but that's how you look at it. Silver market. I'm in the office last night with our fellow traders, and I'm going, guys, this is the sale, $39.78. My dilemma is, for my client base, a risk of that many cents, it's too much money for them. But that's where I think you're going to peak, is that number with a stop over 40.40. And I think I've mentioned this even on these videos. Look at today's action. I mean, to me, it's classic textbook. And what's exciting me is the market's starting to become, again, a bit more manageable in terms of it's stopping where it should and found support on the break against the Bollinger Band. I find that all exciting. In the copper market, I've got to leave the chart as it is. You know you were down here. If you cross 407.30, and today's high was 407.15, and I think you'll cross it if the stock market stays strong, well, your swing line's going to turn up. Your Bollinger Bands will become the key to the market in today's low, and you might get a rally back into the 420s on short covering. But there's nothing bullish on the chart because you're still under that 18-day average of closing prices. Here's crude oil. And as you can see, once you get too far into these Bollinger Bands, that was 75.71. You're at 85. You've rallied $10 a barrel already off of this, but I don't see anything bullish on the chart. Nothing. I see resistance back up at that red line. Let's call it 92.67, and the market correcting an oversold condition. That's all that I'm seeing. The gold-silver ratio didn't really do much today. It pretty much stayed flat, and you can see that at this point in time. But until we have reason to say otherwise, gold is still a better outperformer, and that's all you can say, an outperformer, than silver is. Here's the bond market. Look at how the market stayed over this Bollinger Band during this crisis period. And I admit, this is highly unusual. And again, like I saw in the Dow, I hadn't seen this before. So this is something new. There's my phone. I'm going to turn that off so we don't have to start this over. But it just works that way. So let's just see how this all plays out. But this break today, as far as I'm concerned, matches with what I'd expect when you're over a Bollinger Band. And again, the stochastics are turning down. I think there's more downside to these markets. So some of these big vertical plays, be it up or down, I think have ended. Past tense. I don't think they're ending. Ended. And I think the market's going to get to a much more rational way to trade. And here's the rebound gasoline, and it fits right into that. So with that, I'm Ira Epstein. You all have yourself a good day.